waited for our MSU setup. So as we can see there, push down, another push down, and then a sweep, okay, an engulfing pattern. And if we had waited for that trade, we would have taken out into our trap, marked the trap, okay, and swept it. Welcome back, team. I'm going to talk you through some trades we took on Friday. I made a mistake. I've gone fucked it up. I took a trade before my trading window. I was sat at a festival drinking a cider, watching an artist, eating some chips, and I messed up. I took a trade when I shouldn't have taken a trade, and then because I had no signal, look, long story short, I wasn't following my rules properly, and as we all know, you've got to follow your rules. Your rules will keep you on the right side of the marketplace. So I'm here to hold my hands up and say I've made a mistake. I accept my losses. I'm going to talk you through why it was a loss and what we were actually waiting for, and hopefully you can learn from my mess up. As always, if you're not doing so already, please make sure you subscribe to the channel and catch you on the other side. So look, this is the setup. This is the zone. To be fair, it's a really clean setup, and I'm pretty happy with it. Now there are three kind of major types of liquidity that I like to look at. Okay, so I'm going to talk you through all three of them, and we'll go from there. Really. Okay. Now let's just imagine, okay, that price is back here. Okay, so this is the morning session. Okay, we're here. This is how we're looking at the marketplace so far. Ignore these bits on the right. Okay, this is the marketplace so far, and this is now the trading range that we're working from. If we jump up a time frame, we can see a little bit clearer there. Okay, this is that big move down that we're looking at here. That's our range that we're working with, our bearish range. So three types of liquidity that we're looking for. Okay, I'm going to draw them big and bold for you. You can see them really easily. Let me just hide that as well. Let me just get rid of that, and I'm going to get rid of that, and I'm also going to get rid of that. Okay, and we'll come back to these so I can look at those another time. Okay, so you've got liquidity below a range. Okay, let me make this nice and thick for you so you can see it really easily. Okay, so you've got liquidity there below a range. Okay, that is a key structural form of liquidity. If we've got a range, we start rejecting from it. If price does something like this, okay, then we can look at buying back up into our premium part of the range. So I like to use premium discount. Okay, it's pretty simple. You want to be buying from discount, you want to be selling from premium. So if price gets back up above our 50% of the range and into one of these premium areas, okay, we can be looking for sell. So that's our first form of liquidity. Okay, that is our liquidity below a range. Okay, the next liquidity that we can look at is key areas of last remaining liquidity. So the last high before the main high is a really common one. Okay, that's that one here, which I've marked out with this blue line. I'll make it a little bit thicker so you can see it easier. Okay, so that is our next. Really, that's probably one of my preferred forms of liquidity. I love trading that type of liquidity, especially if we've got imbalances and supply above it. So that's a really good one to look at. Okay, and then the final form of liquidity that we want to look at is inducement liquidity. So this is right at the top of the range. We're still in bearish market structure, but what we're basically saying is that if price sweeps this one of these areas, whether it be this one and gives us some form of structure to come down, or whether it be this one and gives us some form of structure to come down, okay, we're basically going to get involved with the trade. Now for me, this is how ultimately I stay on the right side of my trading now. I trade these larger moves and I'm looking for manipulation either side. Okay, so let's see how the day unfolds. Let's see if we get any one of these. Okay, really simple. So let's press play. Okay, so the morning opens. This is our London open session. Okay, the morning opens up and it does sweep this zone. Now ideally, if I'm going to be trading literally a sweep, I want, no more than a couple of bars below. Let's say these are bars. I want no more than a couple of bars below and for price to break back up. If we get this big close below, and this is on the 5-minute time frame, so as a day trader, 5-minute time frame is a bit much, okay? Unless I get a really clear retracement into that, so I'm talking something like this with a push up, and then like some sort of engulfing pattern that's going to take me higher, I'm not getting involved in that. And if this was like this, I could have bought it if I was happy to. I could have bought it like that as a sweep and held it up to there. Okay, now that's an okay trade. Personally, because I know this trade is ultimately limited by one of these zones, this is not a high potential trade. Okay, what I'm looking for in all of my trading is trades for to be high potential and high probability. Okay, I did a webinar on that recently. Make sure you go and check it out. But high probability trading is where the trade is most likely to play out. So a buy from here, high probability. A sell from here and a sell from here, those are both high probability. This trade, however, because it only goes up to 3.5R, this trade for me has a low potential. So it's high probability, low potential, because it's ultimately limited by the overall structure of the market. And I would expect sells from here. Now it could continue up. That would give me my 5-to-1, but for me that's too much of a risk to take. I want an easy 5-to-1. If I can get 5-to-1 from like halfway up in the range like this, if I can get 5-to-1 there, that's now both a high potential and a high probability trade. It's high probability because it's in the right area. Let's say our sweep was there, okay? It's and so let's say price came down here and then rejected, okay? For me, that is now high probability because it's in the right area for buys, and also it has a high potential because I'm getting to at least 5R before I get to the first area I'm looking at reversals from. So I can take out a comfy 5R there on that first liquidity point, which is just above here, as you can see. Okay, so I can take out my 5R there, take 80% out of the trade. I'm absolutely golden from there because if I get up to here and 8, 9, 10R, then fantastic, that's just a bonus. But before then, I want at least 4, 5R out of the trade for it to be, for me, be a high potential trade. So whenever I'm looking at something that isn't high potential, I'll often just wait, if I'm honest. There's no point in rushing these trades at the end of the day. That, for me, is not a high potential trade, and therefore I'm not interested, okay? What I'd rather do is wait for a reversal to happen. Now, as I said, I was sat at a festival, I was drinking a cider, I was enjoying myself, sat in the sunshine. I didn't really have any signal, but I did see this key area to be taken. So what we got here, okay? Let's mark them out. We've got Asia's high, okay? Let's mark that out as Asia. So we've got Asia's high there, okay? We have, I think it was on maybe the 3-minute. Yeah, we've got an imbalance there, maybe the 5-minute. Yeah, again, you can see these are sloppy kind of trading for me, okay? So we had an imbalance there, not very accurate as you can see. Imbalance from there, okay? But we had all the elements that we needed, okay? We've got a supply zone here, okay? We've got an imbalance there. We've got Asia's range there. And we've got our liquidity sat just below imbalance and supply. So for me, that's enough for me to start looking into, getting into a trade, okay? And what did we get? Okay, we had our MSU set up. Push down, push down, push down, push down, push down. Then a manipulation of that area. Let's mark that on as well. Manipulation of that area, MSU, okay? So for me, that's enough to get into the trade. Now, had I been not at a festival enjoying myself, I might have got in something like this, okay? Stop above the high, okay? Held to first liquidity point like that. And we push down. We get a nice, 3R to first liquidity. If we'd got like the first major liquidity, which would have been maybe one of these areas, we would have got 6, 7, 8R. So, that would have been a really, really good trade. But we didn't. I caught this one late, okay? And I caught this one, as you can see, after it starts breaking down further. Now we start to get some bearish structure, okay? But then what happens? This blue zone here that we can see, this blue zone here is the New York Open. And the New York Open has clearly wanted to manipulate some more of these liquidity areas. So, we've had a good run up, which is great. We've taken out one liquidity point. We've filled an imbalance. We've now tagged this supply zone. And what's sat in 50% of the supply zone? We've got our Asia high, and we've got a liquidity point above here. And as we can see, price quite comfortably sweeps all of those out. Now, the beauty of this trade, had we waited, is that now we've taken out all the buy-side liquidity. The obvious move now is down into sells. We had news coming up. We've got our New York Open trap there, really, really clear now. So that's our New York Open trap. That's going to trap buyers into thinking that the price is going bullish. So what we should have done is waited, held on, waited for our MSU setup. So as we can see there, push down, another push down, and then a sweep, okay, an engulfing pattern. And if we had waited for that trade, we would have taken out into our trap, marked the trap, okay, and swept it. So that would have been a comfortable 4.5 hour to our first liquidity points down here. And we would have used the market structure, the timing in our, you know, it's like I said, I would have caught it had I been at home, but unfortunately I was distracted. And it's just a really good example. Don't trade when you're not in the right place, whether that be not able to check on your computer, whether that be distracted, whether it be out and about. There's a balance to find with trading, okay? I took my trade early. I took it at 12 o'clock. I'd never trade at 12 o'clock normally, okay? I didn't wait for New York to open, which I would always do because it creates my trap and then I've got a good target. I didn't take necessarily a high potential trade. You know, there wasn't any clear liquidity points that we were aiming for. You know, ultimately I would have had to aim to one of these, 1R, 2R. I'd have had to get my 5R out. I would have had to go all the way down here, okay? And that's a massive trade, as you can see. So, you know, I didn't have all those confluences stacked in my favor. And actually, had I waited until the right timing, so kind of 1 o'clock, I would have seen price continually making these moves up, and I would have expected this supply zone to be tagged 50% and the Asia to be taken, and maybe even this last remaining high to be taken. But either way, didn't follow the rules properly, ended up in a loss, and then I missed a good trade. So look, we all make mistakes from time to time. It's a learning process, as always with trading. We're constantly learning, constantly evolving, and you know, I'm happy to hold my hands up and say, look, this is a mistake. It goes in my journal, and we just make sure we don't make it again. Now, thank you for tuning in, guys. If you are not doing so, please make sure to subscribe to the channel and hopefully catch you in the next video. Make sure you check out the next video appearing in the top left-hand corner. Fantastic tips to make sure you stay on the right side of the marketplace and stay profitable. Cheers.